in time where we discuss trades that are really important at this time and get you ready for the rest of the week. First, let me say what a great place Ticker Tacker is to be. I mean, it's wonderful for leaders like myself, where we have a chance to actually show what we can do in a kind of international setting, competing against some of the top traders around the world. And that makes it a great place for traders themselves, for new traders or experienced traders, where you can get some great input from people who have different perspectives around the world. So, as you know, I'm very excited at this point still to be the leading trader on Ticker Tacker. I think last I looked, it's plus about 195% since October. So that's pretty exciting for me. And it's even more exciting for my followers, I have to say. So there are reasons for this. I'm not accidentally up, these kind of numbers. There are reasons, okay? And I've talked about it in the past. I will be talking about it going forward. And it has to do with two things. One is risk control, and its sister risk reward. And the other is entry. Where do you get into the market? Because that's so key. You can be right about the market, but if you get into the wrong place, you're going to lose money. You're going to get stopped out. Even if you're right about the move, it's going to leave town without you. So those are the things I focus on for my clients and followers. Are risk reward, okay, and entry points. So the markets have been pretty choppy the last couple of weeks. We're starting to get some really interesting movement starting the last couple of days, and we're into several trades. And I'm going to show them to you because these trades could be relevant for a long time and could really make your year. Let's start out with pound Australian dollar, okay? This became very interesting to me. This is a 4-hour chart. As I began to see divergence develop around the June 25th timeframe. And as you can see, price was making new lows all the way down to 1.7872. But the momentum index, DCI in this case, said, no, we're not going any lower. There may be some people selling down here, but the momentum is changing, and we're going to go the other way. So that's my first warning that I got excited that there was perhaps a change of direction here. And change of direction after a long move is always important to me because that's where the big money is made, on the change, on the change from a long-term move. That's where I've always made the most money and made it the fastest. So anyway, as price was going down, momentum said, no, we're going up. Then we had a flip over here, these dots. This is parabolic SARs, which also indicates a change in direction. The dots were coming down. They turned around and started up. If you're interested in the mathematics of parabolic SARs, you can look it up on the internet. I'm not particularly interested in it, only in what it shows me. And it shows me a change in direction. So now I have two things that got me very interested. One was the change in momentum. Two was the flip in the parabolic SARs. Now the third thing is developing is a pattern, which is the third thing I always look for. Patterns for me can be head and shoulders, can be rectangle, triangles, or even a trend line is a pattern of sorts. This is turning into a beautiful head and shoulders. Over here is my left shoulder. Here is your head. Here is your right shoulder. We're coming up to the neckline right here, which is at 1.0870, which is only 14 pips away. So you must be long over 1.0870. And if it stays over, if you get long and it stays over 0.8070, you're looking at a lot of money and potential here. Why? Let's take a look. Look at this weekly chart here. Pound already went from roughly 2079 down to 1.79. Okay. That's, what was that? Almost 2,800 points. So a halfway retracement of this whole move is going to be 1,000 to 1,400 pips. And that ought to be enough for you for the next few months. As I said, we're getting long down here at the neckline at 1.8070, and we're going to build this trade as it goes. We're not going to let it go 1,000 or 1,400 pips up without us adding to it. Okay, and that's just going to buy one lot here and pray and hold it for 1,400 pips. No, we're going to build it, and the reason is we're only right about 30-40% of the time on our trades. Even some of the greatest of all time will tell you that. So on that 30-40%, you've got to make a lot of money to pay for the losses that you have the other 60-70% of the time. And as you follow me weekly here, you'll see how I add to the trades, how I build it as it goes. Just in general, the general idea is, the markets never go straight up. They go up, then they go sideways and consolidate, then they continue. And the reason for that sideways consolidation is to shake out all the weak players. But for us who see the big picture here, we're going to use those consolidations to add to our trade and make it bigger. So, these trades turn into monster wins when we do win. So basically, and I'll be showing you how we do this as we go forward in future weeks. When we go into these consolidations, we'll draw our lines, rectangles, triangles, trend lines, and when they break out to the top side, we're going to add to our trade. And we're going to look at each trade as a new trade, okay? So like here, we're buying at 1.8070. We're only going to risk about 10 ticks, which is another beauty of the way we trade. We use the lines to give us the price above which we want to be long, below which we want to be short. So we always know whether we're right or not. So we'll make the trade here. We're not going to have to risk more than 10 pips because we know the price on that line. And as the trade goes on and we go into these consolidations and add to them breaking out, we'll make a whole new trade at each line going up. And again, we'll only be risking 5-10 pips on our additions. Okay, so as you can see, we're all about low risk and we're all about entry point. Those, to me, those are the key things that have kept me in the business for 25 years. People always ask me, Jeff, what's your best trade? I do tell them, I think in 2013, I had pound cat for 5,000 pips, but that's not the important part. My best trades are all the losers I got out of immediately with a 5 or 10 pip loss. Those are by far my best trades. So pound ordy, we're going to be looking at that over the next few weeks, hoping that progresses the way we see it. Another couple of interesting trades for you to keep your eye on that I'm also in. And are pretty simple, same logic. As I'm looking for ordy NZD. Okay, here it is. Daily chart here. Okay, Australian dollar, New Zealand dollar daily. I'm short on that trade. Why? First of all, you can see it was running up to 3 higher highs here in the daily chart, and the momentum index was saying, no, we're not going. We're running out of gas here. We're going down. So when I saw that, I get interested when the momentum's changing. I see the parabolics flipped from up to down. And I was able to draw in a line here, which you could either call a trend line or definitely a head and shoulders top. Left shoulder, head, right shoulder. Of course, I sold it coming through the neckline, and I'm still short. And it measures at least another 200 pips down here. So I'll be looking to, again, on this trade, we're in a consolidation now. We're getting rid of the weak shorts with these sharp rallies. As soon as we get rid of all the weak shorts, I'll be able to draw a line underneath the bottom here, and I'll add to the trade coming out the bottom. So this is another exciting trade to keep your eyes on. Now, another trade that fits in that category, which has been really frustrated for the last month or two is euro pound. Uh, okay. So here's euro pound. I noticed this trade back in March, okay, where we were making higher highs up to the top of the head. But the index said again, momentum index said, no, we're not going up, we're going down. And and then the parabolic flip from going up to going down, another reason. Actually, a third reason, which I like, see these long wicks up here? You know what's happening there? As it was going higher, a lot of people, smart people, figured, this has got to go down. I'm going to start selling it. And they're right. And they started selling it here, and they were right about it going down. But the market said, no, not so easy. Before we go down, we're going to take you out. And that's what these long wicks are. You see them at the tops of markets and the bottoms. And all that is the market taking out the stops of the people who are trying to get with the move. So again, it's critical where you get into the market, okay? You can't just jump, if you jump in here and just sell it here, how much you're going to risk? You're going to risk 100, 150, 200 pips? They're going to get you. They'll take that as high as they have to get all the stops before they get down, so before they go the other way. So the critical thing is not just being right about the market, but where do you get in? So this turns out to be a giant head and shoulders, euro pound. Very frustrating. Left shoulder, giant head. Right shoulder comes through the neckline, and I'm looking for 800 pips down if you do that measurement of the head and shoulders. But instead of that, it's every time people try to sell it, it would rally back up to this neckline. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 7 or 8 times people tried to sell it below the neckline and just kept going up. So I've been watching it. Now let's see what happened over here on the right side, okay? We have to go to a smaller chart to see that. Okay, what I'm showing you now is just a close-up of over here, what happened to that line. This is the 4-hour, and wow, look what we see here. Beautiful head and shoulders on the 4-hour chart with the flip in the parabolic, with a wick to get rid of the new shorts. And we have this neckline, not quite perfect because the euro pound is not perfect, but I sold it this morning coming through the neckline at 90.11. So we're now about 20 pips lower than that. I will stay short as long as it stays below 90.11, where I got short. I will get out at break even and let it go as high as it wants. But turns back below 90.11, I'll get short with it. Because if you do the measurements, euro pound, the first one measurement is 88.48 with the head and shoulders, which is about 150 pips, I guess. But the next one after that, off this daily head and shoulders, is to 78.74. So you're looking at 1,100 pips there, along with the possible 1,400 pips on pound order. And this would not be surprising because, the pound is famous for these kind of 2, 3, 4, 5,000 pip moves. And as I mentioned, my biggest trade ever was pound CAD for 5,000 points in 2013. Interesting chart if you want to go back and look at that. I think we might have time for one more quick trade here. Euro yen, I'm quite interested in. It's been in a triangle for quite a while. It popped out of the triangle. If it comes back into the triangle, it's going to be a failure of the breakout, and I'm getting short. In fact, I just got short a little while ago under this triangle at 121.25. It's only 3 pips below that, but 121.25 will be my pivot. Below it, I'll stay short, euro yen. Above it, I'll get out. The collapse of the euro yen would be consistent with maybe the stock markets turning around and going down. So keep your eye on the markets for an indication of these yen trades. As you know, the yen's a flight to safety, markets down, yen up. All right, we're running out of time here. Next week, we're going to modify the show a little bit. We'll talk about the important trades, but I wanted to talk to you for a few minutes about how I got here. How did I get to be the number one trader up about, at the rates that I'm going at? How did that happen? From my days at the Board of Trade, switching to online trade, and all the experiences I had in between. I'm going to tell you about that, and maybe it'll help you in your own career. With that, let me wish you a great trading week, and we'll see you on Wecker's Weekly next Tuesday. Goodbye for now.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.
Hi, I'm Jeff Wecker, and I want to welcome you to my profile on Ticker Talker.